What's up? So I did take a trade today, and I'll go over why I took it, what I did wrong, what I did right, and yeah. So when market opened, these were the hourly highs and lows I had marked out. First, there was this high right here, right where market opened, and then on higher time frames, we had a 4-hour high right here, a 4-hour low, and then these two highs and lows were both hourly. So I had a fair amount of liquidity, buy side and sell side, that were attainable, but market opened kind of right in the middle of them both. So I was just going to base my bias off whichever got swept. And this high right here did, let me scale down to the 5-minute. So price opened and did sweep out this 1-hour high, but I didn't get any entries off that. It just chopped up. So I did not take that trade. And then after consolidating until 950, which is in the macro, it ended up jumping way up, and then it took out, yesterday, these string of just lots of buy side liquidity. Well, it swept out all that. So I was looking for shorts. I mean, that probably should have been the obvious draw on liquidity even before market open, just seeing all of this buy side. So if you could have maybe took an entry up within here, you could have got a great long play. But I did not catch that huge leg up. There weren't too many entries. It was just candles, 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 and then right here. But so I did not catch that leg up, which was drawing towards these draws in liquidity. And then after it swept out all of this, I'll show you what I saw. So let me go down to like 3 minutes, and then I'll go down to 1 minute. So I saw the sweep and then consolidation, just showing wicks, which is a good sign of maybe a reversal is coming. So I was just looking for an entry, and then I got, here, I'll show you. So the break of structure I was looking at was right here. We got 1 minute break of structure, and then we ended up getting, let's see, did we get a 5-minute retrace? Yeah, so we break structure right here on this candle. We get a 5-minute retrace, and then I'll show you what I entered off of, which was not a good entry. Today was not a good trading day whatsoever. So I got my break of structure, I got my high time frame sweep, and then these two candles were super bearish. So I saw price come way down here, which would have been closing below the inverse fair value gap, and which would have been my entry after I got my break of structure and 5-minute retrace. I would have solely just entered off the inverse fair value gap. So I saw price come down here after these two strong bearish candles, and I was like, all right, this is definitely where price starts to take off, and I was going to look for my short entries. So I saw price come down here. I thought it was most definitely going to close below this fair value gap, which would have inversed it, making it an inverse fair value gap play, but it came up here, and I thought to myself, all right, I'll just get a better fill, because in that moment I was just set on that price was going to close below this fair value gap and continue lower. So I just took my fill right there, and I put my stops above this high right there. And as you can see, price chopped up for a minute, was showing some signs of bearish reversals, and then ended up just going right up, stopping me out. And then as you can see, that was not the high that price wanted to seek out and use for liquidity today. Price kept going higher, swept out this high, that high, and it swept out every single level of buy side liquidity. So what I did wrong today was I just should have waited for more confirmation, seeing maybe like a 5-minute break of structure or 3-minute break of structure, confirming that this is a reversal. Then I should have waited for bare minimum a closure again below this fair value gap, and then possibly an imbalance. So number one thing I should have waited for more confirmation. Number two, I should have at least gotten a confirmation of my second confluence, then look for a third confluence, which would have been an order block, imbalance filled, fair value gap, any one of those. So I took my entry, not getting total confirmation, and it ended up just wicking into this fair value gap, not closing below it, which would have shown bearish signs of a reversal. Ended up wicking it and using it as just a way to move up higher and take out all these highs. So now it's making its move down, it looks like. But I just, the high I picked to make the reversal was not the right one. So, not too good of a trading day, but I only used one contract because it wasn't my A+ setup, and I only use 2 contracts if it's my A+ setup. So I got stopped out, I only lost $68, so not too bad. But if I didn't get stopped out, this would have been a crazy RR trade. 2.65, I mean, just targeting this sell side liquidity down there, which would have been perfect, but ended up not being the high that got used as liquidity. So in the future, look for more confirmation and make sure you get your third confluence, aka just stick with your strategy. And when you do that, like I said last Thursday, just stick with your strategy and you're winning way more times than not. And if you don't get your strategy, then you don't take a trade. You just have to deal with it for the day. And when you do take a trade, hopefully you're in the green. So definitely some lessons to learn today. But we have CPI and PPI the next 2 days, so hopefully I can find a good entry there with good confirmation and my third confluence. So only lost $68, not too worried at all. Still have the whole week ahead of me. So yeah, that was today. See ya.